RVNL is literally the backbone of Indian Railways. It is backed by the government. It has a massive order book of 1 lakh crore rupees. But from 600 rupees, its stock price has fallen down to 250 rupees. And the worst part is that in the last 1 year, RVNL investors have seen 40% of their money evaporate. So today we are going to look at RVNL with hard data and answer the big question. Can RVNL recover from 250 rupees levels and reach 600 rupees again? So you can see today's agenda on the right side clearly. So let us understand the full story with fundamentals, order book reality and technical chart levels. See, to understand why the stock crashed, first we need to understand how RVNL makes money. Now back in 2003, the Ministry of Railways created RVNL to speed up infrastructure, laying down the lines, converting the gauges and electrifying the tracks. And recently they have diversified aggressively. They are also building metro projects, toll roads and also laying down telecommunication lines like the 3,600 crore BharatNet project with BSNL. They even have a contract to build 120 Vande Bharat train sets. And as of today, RVNL is sitting on an order book of 1 lakh crore rupees. So the $1 million question is, if the company has 1 lakh crore rupees of guaranteed work, then why is the stock price in a free fall? Because in an infrastructure business, getting the order means absolutely nothing if you do not execute it. If the government gives you a massive contract, but you don't do the work, then you do not get the final payment. And RVNL does not invest its own capital. They get funding from the Ministry of Railways. Now their job is to simply manage the contractors and get the job done. And for this, they charge a fixed management fee. On railway projects, they make around 8 to 8.5% margin, and on metro and highway projects, they make around 10%. So this is a fundamentally low margin business. You will never see their margins in the 20% range. And right now, their execution is painfully slow. The orders are just sitting there, but the on-field execution is lagging. Now let us have a look at the actual profit and loss statement. Remember those 8 to 10% project margins? Now after all the operational cost, RVNL's actual operating profit margins used to hover around 5 to 6%. And today it has shrunk down to just 4%. Their top line revenue is stagnant at around 20,000 crore, which is actually lower than what they had reported in March 2024. And in the stock market, the most basic question you have to ask is the company making more money today than it was making yesterday? In RVNL's case, the answer is no. They are actually degrowing and stagnant from the last 3 years. In 2024, they posted a net profit of around 1,500 crore, and today that number looks like it is going to be almost cut in half, tracking closer to 800 or 900 crore. Now combine that shrinking profit with the stock's valuation. At its peak, retail investors were buying this stock at a price to earnings ratio of nearly 90. Think about the mathematics in that. People were paying a 90 PE multiple for a company with single digit margins that is executing projects at a sluggish pace. Now that is the definition of a valuation bubble. And even today, after a 60% crash, the PE ratio still sits at 60. For a company with 4% profit margin and negative profit growth, that is still incredibly expensive. Earnings per share are dropping, profit growth is negative. So the narrative was sold, but the numbers simply do not back it up. And that is why at RangaOne Finance, we do not chase stories. We invest in businesses operating in future-ready sectors with long-term growth potential where the earnings can justify the valuations over time. So if you are stuck holding RVNL at higher levels, or if you are waiting to buy the dip, let us look at what the chart is actually saying. Let's look at the weekly time frame. It is showing lower lows, lower highs, lower lows, lower highs. So there is zero sign of a trend reversal. And if you are looking for a glimmer of hope, the stock must absolutely break and hold above the 325 rupees level. And if it crosses 325 on the upside, we can start talking about a reversal. But right now the stock is in a nosedive. In fact, the chart is showing a high probability of another 25 to 30% downside, and the next major structural support level is near 160 to 155 rupees range. And this is where investors need to understand the harsh truth of the stock market. No stock can keep on going up forever if the company's earnings are not growing with it. So what should investors do in RVNL? See, if you have not invested yet, stay away. Do not buy the stock just because it has fallen down or because people are creating an hype around it. And if you are already holding the stock with a small loss, then it is better to exit and protect your capital. And at RangaOne Finance, this is exactly how we guide our clients. We do not tell them to stay stuck in a weak stock just because they have already invested. We look at the valuation, the fundamentals, the chart structure, and most importantly, the opportunity cost. And if you're sitting with a 20-30% loss, ask yourself this simple question. Are you willing to wait for 2 to 3 years for RVNL to recover, or you want to shift that money into a stronger stock where the growth and recovery potential is better? See, RVNL's results are weak, valuation is not comfortable, and the stock may remain in a long consolidation before any meaningful recovery. And remember, if 100 rupees becomes 70 rupees, 30 rupees is already gone. Forget it. But that remaining 70 rupees can still work for you. And as a responsible research analyst, it is my duty to help my clients protect their remaining capital and deploy it in better opportunities rather than emotionally down averaging and keeping the capital stuck. So the bottom line is avoid fresh entry in RVNL and do not down average blindly. I hope you must have liked my analysis about RVNL, and let me know in the comments below which other stock do you want me to analyze, and I will see you very soon in the next video. Till then, this was Sanika, MD at RangaOne Finance, a SEBI registered research analyst firm. And don't forget to like, share and hype this video. Bye bye.
Investment in the securities market is subject to market risks. Read all the related documents carefully before investing.